Good afternoon, and thank you for joining me for another office hours training. I'm Crystal L. Gunn, your financial strategist. And part of my job as that strategist is to help you heal and redefine your personal financial relationship, right? So that you can live the life you desire and you deserve. I also help you to have some aha moments, some self-discovery moments, and helping you see what no longer serves you so that you can release all of that and soar. Because all of that helps with the breakthroughs. That's where you start to shift. That's where the magic happens in your life, right? I also try to bring you information that you may not necessarily know, or that you know some, but not a lot of, so that you can make financial decisions in your life that's going to benefit you today, your children tomorrow, and the generations that follow, right? So all of August, I've dedicated to life insurance because it's so very, very important. And, digging into the reasons why it's important, educate you more on life insurance, show you that it can be affordable, and then we ultimately can connect and get you some coverage. So for the first 2 weeks of August, I spoke about misconceptions of life insurance. There's a ton of them, right? So go back and watch those episodes and see what misconceptions you had so that you can release them, use this powerful tool, and soar, right? And last week, I started talking about why life insurance is so important and giving just some uses of life insurance. And we did that this week as well. So let's continue to look at ways that we can use life insurance. Because a lot of times people think about it just from the standpoint of someone dies and we need to pay for a funeral. Well, that's the basic part of that. So, number 8 reason why we can use life insurance, and a way to look at it is creating an inheritance, right? And so life insurance can create an inheritance for your loved ones, providing them with a financial foundation to build. This helps establish and grow family wealth across generations. It's great to leave money for them to be able to pay for your funeral, right? Cost to live, it costs to die. But how do we then leave money, leave inheritance? There's all of this talk about passing down generational wealth. Well, here are some ways and some examples and reasons for using life insurance to create the inheritance, helping establish and grow family wealth across generations, right? So, number 1, providing a financial foundation for your children, right? So let's just say a parent purchases a life insurance policy and designates a trust as the beneficiary. Upon the parent's passing, the death benefit provides a significant financial sum that the children can use to pay for education, buy a house, start a business. And so this financial foundation helps the next generation begin their adult lives with fewer financial burdens and greater opportunities, contributing to long-term family wealth. Like, what would your life have been like had you had, 250,000, half a million, or $1 million that was put into a trust for you once your parents died, that helped you, right? Again, being able to build that generational wealth. Number 2 is it can equalize inheritance among heirs. So let's say you have several children, and you own a valuable piece of real estate that will be passed down to just one child. Now, to ensure that the other children receive an equal inheritance, you can purchase that life insurance policy for those children as the beneficiaries for the same value, death benefit that would be for that one piece of real estate that other child inherited. So life insurance will allow you to fairly distribute assets, ensuring that all of your heirs have equitable share of the family's wealth without the need to sell and divide valuable property, right? I literally just talked to someone the other day, and she has a sister, and you know, just getting stuff ready and going back and looking at stuff for her mom. Her mom owns her house free and clear. And she said, the lady that I was speaking with said, "Oh, well, yeah, I talked to my sister and we're just gonna sell the property." I said, "Well, why would you do that?" And they both have their own home, so they don't need the property. I said, "Yeah, but that's an asset, right?" I said, "If you sell that property, let's just say it's worth $200,000 and you both get $100,000 when you walk away. Easy math, right? Um, Not looking at all of the fees associated, but let's just say you both walk away with $100,000. You're gonna spend that $100,000. Most likely, you won't be able to look back at it. I said, now, if you need it, that's one thing. But most people will sell a property and then just blow the money and don't have anything to use for it. I don't even think the property is worth $200,000. However, it is an asset. It's property that she owns free and clear. I said, you all may at some point need to use the equity in a house. You may put the house in a trust and use it as rental property, or it can be sold to um, family members who need their starter homes. I said there's so many ways that you keep that asset in the family and be able to have it for generations that follow. Um, I don't know, last week, I think it might have been last week on one of the episodes, I talked about a movie on on TV, The Gentleman, but it was a series and it was the not the American version. And the one guy came back home and because his father had died and he was put in charge of the estate. And he found out that there was some issues, some money issues, and they needed some money, right? And he wanted to sell this great big castle that they had, right? And the attorney said and asked him, "Well, how long has this estate?" Because it was the castle and everything else that went on this land and acres of land. And he said, "Well, how long has this estate been in your, or this house, home been in your family?" And the guy said 150 years. Now he wound up not selling it. But 150 years, the asset had been in the house 100 in the family for 150 years. I just want you to think about that and what that can do. Um, and I don't care the size of the property, right? It's an asset. So being able to equalize inheritance among heirs, but using and keeping those assets, which rolls into number three, leaving a legacy for future generations. So a grandparent, say, could take out a life insurance policy and name a trust as the beneficiary. So the grandchildren ultimately get the money, but the death benefit is placed in that trust and can be used to support grandchildren's education, healthcare, future endeavors, business, starting a business. But because the funds are in a trust, that grandparent gets to determine how those funds are used. So, the grandparent may say, these funds are used for, my four grandkids to pay for college tuition. If they don't want to go to college and they're going to trade school, it can be used to pay for trade school. If they're starting a business, it can be used to start that business. But it can go deeper into, when that child will get the money for going to school, when that child will get the money for going to trade school, when that child will get the money for starting that business. What kind of things do you want to make sure that's in line for that business before they can get that money? So that grandparent or parent gets to dictate how that money is is spread out or given to those children based off of what they know, the kids, but ensuring that the money isn't wasted. But also the thing that's really important is teaching them why this is important, why they need to do the same thing, why this needs to continue generation after generation after generation. So this to create that lasting legacy, ensuring that the grandchildren and future generations, right, can benefit from the financial resources provided by the life insurance policy, helping to establish generational wealth. Another way or example of that is paying off family debt and protecting assets, right? So that life insurance policy can be used to pay off outstanding debts, such as a mortgage or a business loan upon the policyholder's death. So this will ensure that the family home or business can be passed down to their heirs without the burden of debt. Again, My example of the guy in that movie, this house has been in our family for 150 years, right? And so now if there's a mortgage on it, because again, we may want to be able to pull equity out of the house or whatever, this life insurance policy can pay that debt off. And now we have this asset free and clear as well. Or for the business loans. Okay, well, you got the succession plan and you have all of that, and that next generation might be at this point running that business, but there was this debt on there. Well, now that death benefit pays off that debt on that business, which then allows them to possibly go get more debt if they need more debt in order to scale, or if they're just doing fine, now there's no debt on this business. Whatever it is, it pours into the business again, being able to protect the asset. And so by eliminating debts, life insurance policies can again protects the family's assets, allowing them to be transferred intact to the next generation, thus preserving and growing family wealth, passing down generational wealth. And number 5, funding charitable donations and trust. So the beneficiary of your life insurance policy can be a charitable organization, or you may have a family trust as the beneficiary. This would ensure that upon the policyholders passing, a portion of their wealth is used to support causes they care about or to provide ongoing financial support to their family. So let's say, through my nonprofit, we do something called the Red Dot Project, where part of it is coming together to pack sanitary supplies and donating or giving those supplies to organizations that service the population that would need sanitary supplies, right? So let's say you were at every packing party that we had, you were really, really involved. You saw the impact that it had, and you just really felt like it was a worthy cause. Well, you may make AWN Cares, specifically for the Red Dot Project, a beneficiary in your life insurance policy. Well, I want to leave them, $100,000 so that they can continue to work, or $250,000 so that they can continue to work. So you can leave it to a charity or organization that you are passionate about, or you may have a family trust and say, you know what, I'm leaving, $1 million in my family trust for ... And you get to specify what that's for. It might be, for college tuition, for all of the children. It might be for, it might be because everybody's not going to go to college. It might be, if they're not going to college, to start a business or to buy a home, whatever it is, or to be able to put money into an account for every new child that's born. So every child born hereafter, we're putting $100,000 into, buying $100,000 worth of silver. I don't know, whatever the thing is, but you get to dictate that in that family trust. Again, to ensure that upon the policyholders passing, a portion of the wealth is used to support the causes they care about or to provide ongoing financial support to their family. This not only leaves a legacy of giving, but also provides a financial mechanism to support family members for generations. Remember, it's not just about you. This is about generational wealth as well. So, and being able to foster a culture of wealth building and philanthropy within the family. So these examples, illustrate how life insurance can be a powerful tool in creating and preserving an inheritance, ensuring that your loved ones have a strong financial foundation to build on and to grow family wealth over time. You can't just leave the money without instructions on how to maintain it and grow it for future generations. You have to put the new system of success in place. So do me a favor. Think about your immediate family and then your extended family, right? How could life insurance help to pass down generational wealth and change the financial landscape of your children and the generations that follow? Are you trying to actually leave a financial legacy or no? Remember, life insurance is a tool, it's a necessity. And when I talk about getting your financial house in order, right? Life insurance is a part of that. So when you talk about, oh my God, I love my family, the least you can do is have adequate life insurance and use it to make their lives better. We talk about building generational wealth. Well, life insurance is a tool to do that, right? And I keep giving you lists, and there will be some more examples on how to do that. But we also talk about breaking generational curses. So if the curse is going to start with you, then the new system of success must start with you. You got to get the tools in order to create those new systems of success and pass those down, as well as the generational wealth. If you just pass down the money, but you don't pass down the system of success, the structure, the how to, if you're not educating that next generation, the wealth is not going to pass that first generation. You know what I mean? It's going to be done because they're going to spend the money because you didn't teach them. You didn't put the system of success in place. And so I cannot stress that piece enough. And we as a people, historically, we're missing out on an industry that could help stop that 2053 prediction of blacks having zero wealth. We're missing out on the benefits of having life insurance, and we're missing out on the benefits of having a career in life insurance. When we talk about the 2053 prediction of blacks having zero wealth, getting your financial house in order is how we ensure that prediction doesn't become reality. 29 years. That's all we got to 2053. We can't wait until 2050. How are you going to start changing things today, getting your financial house in order, healing and redefining your personal financial relationship? We got to start today. We cannot wait. We absolutely cannot wait. So, what's my favorite thing for today? You all already know what it is. My favorite thing is life insurance. It's such a powerful tool. One of the things though that I want you all to think about when I'm running illustrations and we're talking about I'm talking about life insurance to my clients, especially when this whole concept is really new to them, using it for something other than just a death benefit, right? I have to give them ways to make them think. I have to broaden their horizon, their thought process about this whole estate planning thing, right? And I absolutely love it. One thing that I've noticed is we look at the premium as an expense, and it is because you have to pay it out every single month. But starting to look at it as an investment, I think will change your perspective on a thing. So instead of looking at that premium, oh, this is just another bill that I have to pay, right? Look at it as an investment in you, an investment in your family, and an investment in generations to come. Because when you start to look at it that way, then it doesn't seem like a burden. When you say bill, I got to pay these bills, they always seem like a burden, whether or not you can pay them or not, whether or not, like my mother says, you know, oh God, these bills seem to come around so fast. Shouldn't have any problem with paying them, but it's just the fact that we have to pay them. It seems like a burden. We have to stop thinking about the premium for life insurance or for investing in anything, buying silver, buying gold, investing in crypto. You have to stop looking at that as a bill. Yes, the life insurance premium is coming out every single month. You can't look at it as a bill. It is an investment, and you're going to get a return on investment. And I know for some in our community, it's hard to flip that switch because we may not have investment. So that whole return on investment thing isn't even a thing, isn't even on the radar. So I want you to stop thinking about the insurance premium as a bill and think about it as an investment. Okay. I think that's a little painful and less painful rather. And I think when you start to think about it as an investment and you are setting things up to be able to do leave legacy, make sure your children, grandchildren, great grandchildren are taken care of, even that you have the ability to pull some money from your life insurance policy, or you know, if you need to pull like money from your policy later to supplement your income after you retire, or have money being paid to you if you have some critical illness or some chronic illness. So again, an investment in you, and it's not a bill, right? I like hope that that's resonating with someone. So what are the next three things to do? because this is all a journey. And for some, they're going to get it and they're going to run with it. They see it. For others, it's a little slower because it's so far from what they knew or what they believed or what they even could imagine because they had no idea. So it's a process. Getting your financial house in order is a process. Healing and redefining your personal financial relationship is a process. Passing down generational wealth is a process. All of these things are journeys, right? So take the journey. Give yourself 3 to 9 months to put these things in place, and you will start to see a difference in your life. I promise you. So, here are the next things to do: complete the life insurance calculator to see how much coverage you should have. Even when someone has an idea or someone says, "Oh, I want a policy for, $250,000 or whatever someone may say," I still will go back and ask them, "I need you to do this," because they've come up with something in their mind, but they didn't look at the whole picture. And in doing this is going to give you a bigger picture. So complete the life insurance calculator to see how much coverage you should have. Schedule a free consultation, a free life insurance consultation with me. The link is in the description below. And let's discuss options. Let's see where you are. Like, I have a client and putting together some things for her and her daughter. She has a 23-year-old daughter, and she says, okay, and I get it, I understand it. And she says, I don't want to spend more than $250 month combined. And so I was able to put together some things for her that makes a lot of sense. And she doesn't necessarily need to have a higher face amount because she can, as she feels more comfortable, she can put more money into the cash reserve part and watch that grow. So having those conversations, but understanding exactly how much you might need, and then we can, you know, pull together and make it work so that you're comfortable and that the premium that you're paying is comfortable and works for you, right? So schedule that life insurance consultation after you've done the life insurance calculator. And then again, let's discuss options and let's get you fill the gaps if there are any gaps, and then get your children insured, because the younger that you get your children insured in, like, um a IUL that can build cash value, you're putting them ahead of the world because they can again pull that money out of that cash value when they need to. So again, those links are in the description below. If this has been helpful, please share the video with your family and friends. You never know who's looking for something, who's paying for something. And please understand that a lot of times people will think, oh, there's nothing out there for me. Don't you decide on your own, right? Don't you decide. Let a professional decide and exhaust all options for you. So pass this along to somebody else. Don't be a gatekeeper to your own success, and definitely don't be a gatekeeper to somebody else's success. And I have to throw this back up here again. The trouble is, you think you have time. I hear people say time and time again, Crystal, I just thought I had more time to get this stuff together. We're not, we don't know the day, the hour, or the minute when we will be called home to glory. Plus, not even from the death benefit side, but just from the planning perspective, the earlier is better. It just is when it comes to this sort of stuff, right? So it's just better. I'm not going to go down that route. The earlier, the better. So make sure you do that, and always give yourself some grace. You don't know what you don't know. Mistakes you made, they're in the past. They happened yesterday. You don't, you can't go back and control what you thought. What you can control, though, is what you do from this point on. So I definitely want you to take charge and do something from this point on. So give yourself some grace for what happened in the past. However, don't continue to give yourself some grace when you see this and then you move and don't do anything, right? You can't give yourself grace for that, because it's different when you don't know. But when you know, and you won't even pick up, a phone and have a conversation with someone who can help you. I'm not talking about your neighbor, your sister, your cousin if they don't do this sort of work, but you have to move. Keep striving for your next level of greatness. Never, ever, ever give up on you, and invest in you. Remember, I talked about looking at that life insurance premium as an investment. Invest in you. I promise you, it's the best investment that you will ever make, and you will never, ever, ever regret it. Thank you so much for joining me. If this information has been helpful, please subscribe to the channel. Have a great day. I will see you on Monday. Make it amazing. Thank you for watching. I appreciate your time. Be sure to join me for the private online Q&A immediately following. The link is in the description. And if you haven't done so already, please be sure to subscribe to my channel and turn notifications on so you never miss this opportunity. Thank you again, and I will see you on the other side.